Hey everybody, Brian here, quantlabsnet.com, July 18, 2025. This port and video is going to cover a lot of topics, but generating or vibe coding is a big lesson now, where a couple things to be taken out of it. The Gemini 2.5, a lot of the quality output has, for whatever reason, been taken out over the last however long. So I used to use that to generate a lot of my analysis and whatnot. So the quality is not, the output's not there. I ended up having to find some other uh, alternatives. I thought Grok 4 would be able to do it. The answer is no on that. Some of the newer models with the ChatGPT were not as good as believe it or not. I ended up using ChatGPT O3 Mini High. That was the version I got to get fairly decent quality of output. So there's that. And the other thing is when it comes to doing these sort of things and you're looking for consistency and you're doing things like prediction when it comes to the markets, what I would strongly recommend is to use various types of LLMs across different companies, be it still Gemini, uh, Grok, ChatGPT, and the like. And just what you're really looking for now are just trends and when you analyze things. So that's part of the big thing now. It's just to look for consistent trends for the different ability to output across all the different LLMs. The other big thing is with the LLMs now, I'm finding is the code generation. Uh, it's not like a hallucination, but the output of what you get from the coding uh, could go way off. Sometimes you think it's your actual source code. Um, what it is, from what I'm seeing, is if you just stop it in the chat, especially in Claude 3.7 reasoning in my case, what I would do is stop and redo a new chat, put off the prior history, and then see if the quality output of coding is better, more realistic on the results that you're seeing. I got caught up in that for a good, probably full day from that. Two big lessons to learn from all that. That's why I'm putting that out there. Okay, so obviously I've documented this, at least in the coding output. Um, so there's a bunch of versions here in this particular dashboard I'm about to show you. So first thing is I'm going to show you the Word document, the summary, um, and it was vastly different across different LLMs. But it took me a while to figure out ones that give me general consistency across the board. So as you know, I'm running 45 plus documents being fed into the LLM. A lot of the Gemini 2.5 used to do it. Now it's complaining about it, but I could kind of do it with uh, Grok 4. It's unpredictable. Same with ChatGPT. So that's part of the challenge. But Gemini 2.5 Pro used to do this no problem, but that's part of the change in whatever the quality output and the limitation now. It's not the same as it used to be. Same version, everything's the same. They just did something there on the back end. I just don't know what they're doing. Anyway, so I found that out, and this is only among futures on options. So in there, I was able to break down what are the three most realistic out of 45 plus um, commodities, we'll call them, in the futures market and the options market. And it basically came down to aluminum, Australian dollar, and Bitcoin reference rate. So I was able to break all that down, get a decent output for quality on the summary and the suggestions. Remember, this is very complicated stuff, so you kind of have to use fairly modern, up-to-date model versions. If you're doing this with the quality output's really bad. But you can see here the level of detail in this summary report is quite good. Again, this was tested across many LLMs, being from, as I said, Grok 4, GPT 2.5 Pro was very um, unpredictable, was not consistent. So I tried right across the Chat GPT 4, 5, and it just no good. But then I thought I'd try out the O3 and the O3 Mini High, and that is what this generated. It's quite good. So I stuck with this summary. And then the next step was, and I've always used is Claude 3.7 to convert this report, this summary report, into actual code. This was the result right here. So there's all these different versions. Now I'm purposely keeping these versions in here, these different and these are Streamlit applications in Python. And I purposely did this for historical reasons. The source code can be posted, of course, to my Quant Elite members. That's what they're paying me for on this type of research um, and experiences. So this was a very, very important one. I've also included the summary file that you can learn from that. And then there's the README file as well. The README file goes back to these versions right here, the app 2, and 4. So they are still related to the app 3K2. So there was a couple of things here also want to test. I think this kind of complicated. This particular summary, if posing if you had a $50,000 portfolio account to test this type of strategy and portfolio on. You can see here it does break down the allocation of 20,000, 15,000, and 15,000 at 50,000. So there you're able to get, well, actually, I could just run it as an example. Um, so again, this is with 50K. So if I run this one, let's say app 4, this is at 50,000. Part of the problem is it's just this is really wild, the output, the results, but I just want to show you the different types of strategies it comes up with at 50,000 proposed mock of the account. So here you can see this is the better one. The other ones were crazier. That's why it took me about 2 days to figure this out. So right here, this is the more realistic one at 50,000 starting account size for the next month. Projected growth will be 2.64 return. You can see here with each of the major assets of aluminum, there's 3 different suggested strategies. Same with the Australian dollar, and these are involving institutional level strategies along with options as well. So you got here iron condor, futures collar, synthetic long, um, protective collar. So these are more, excuse me, institutional level. The other thing is I'm now able to back test all of these as well and do that on an individual level. So here, this is very helpful because this data is more realistic with the drawdowns that you start to see. And I've said this before in prior videos. I think the backtesting process that AI is now able to generate is pretty decent. So you don't have to waste your time on that and just tell it backtest for the last month or so. Or sorry, 6 months, depending upon how frequent you want to trade over the next forecast on the next time horizon. So here you can see the breakdown of by asset, um, the back testing, the result, the forecasting. I've also added in the toggling on and off of these strategies to see the individual results. That's why this took quite a long time because of all the features that are requested in the in the prompt. And with the prompt, I now have a monster prompt with all the features available. That's not consistent as well for what you ask on the output. So here we got the Australian analysis, Australian dollar, the BRR rate, again, the Bitcoin reference rate as well. I'm not even sure if these are correct numbers. It's hard to tell. Here's the interesting part. So you can go in and experiment here on individual strategies here with the capital. It's very flexible on this particular dashboard, um, and as well as the Australian dollar and the other one at BR, and then optimize and then turn it on and off, and you can get kind of like not a back test. This is forecasting now. So if you experiment which ones you want and which strategies you want, it can go out and recalculate the portfolio for you. And then also you want the important thing of the max drawdown, potential Sharpe ratio over this period as well. There's a lot here, and you can clearly see which one's driving the profit as well. And I've said this before as well. There's many different options here, so you get one asset because you have a larger allocated amount in a portfolio. What you can do is you get more options on your choices of strategies and whatnot. I'm going to show you the vast difference. So here's the back testing process again. Each time you have to reiterate it because the code gets much bigger, over 3,000 lines that's generated. And you can see now, because I got rid of a lot of the exceptions as well, you can see here, this is all back tested among all the different combination of strategies and instruments. The only reason these are everything in the code itself is somewhat hard coded from the data, with the exception of some obviously the back testing and the forecasting. But if you were to look at the code, you'll see a lot of it's hard coded, and that's driven because of that strategy summary that I said here. So a lot of that's going to be a lot of that's um, going to be hard coded when you look at the code. But the goal here now is to say, okay, this is more like a research tool to know what kind of strategies you want, and also the results for the combination from that. So again, we now are able to see the risk assessment as well. This I didn't ask for, and I've said this before, that sometimes when you with the Claude 3.7 and using Streamlit, you get extra features added in that you didn't ask for, and they're very useful, especially like something like a risk correlation matrix as well. So you can really dig deep here and look at what looks good and what doesn't. So I have that capability now, and going deep. Now, remember, this is starting at a $50,000 account. So I want to be more realistic because this is kind of a new process. If I'm going to throw real life money at this, which I am, obviously, I don't want to throw $50,000 because I'm not like some billionaire here. So what I did was I just decided, okay, I only want 3K. Okay, three and a half K. So in here, as I've let's see here, Streamlit, run uh, app three. So there's two versions of this one. 3K, 3K2. Okay, let's run this one. Okay. So this won't have as many choices because the uh, starting account is very low. So at 3,500. So in here across the three assets, is the weighted allocation will be for, let's say, this one 1166, and the other ones will have whatever it is. That totals three and a half thousand dollars. So here for this particular one, we have here total P&L, which is not very much money, return of 1.48, but meanwhile the max drawdown is 1.09, which is pretty good, because it's a low volatile strategy portfolio with the particular strategies that you choose. So in here, these are all the different choices you have for each one. So for aluminum, you have synthetic arbitrage. Australian dollar, you'd have iron condor, the butterfly, synthetic long, futures hedge, and so on. And here's what you want to watch. Okay, so in here, and again, this is generated by the AI. So I did ask for general results. This is what it gave me. So here, the volatility is going to be the highest in aluminum with a fairly low return. So obviously, you want to focus on the ones that give you the highest return. In this case, it would be BRR and maybe the aluminum, and just totally take out the Australian dollar. So here's telling you what the best strategy is, um, and other metrics. So you can use, let's say, this is important to know. Here's the strategy analysis with everything combined. Okay. So here you can break it down and just see on an individual basis how these strategies will work within the instrument. So in this case, we have Australian dollar. We can look at, just showed you the iron condor, synthetic long. So here you could see, well, maybe you might not want to apply this strategy on the Australian dollar because you're getting a negative return. And you can see that here. And here's your daily P&L analysis. And again, this is for each strategy on each instrument. That's why this takes a lot longer, but now I have a general prompt that should generate this out of the gate. So I don't have to iterate it so much where it becomes very time wasting. So here, the best strategy according to this is this one right here, the BRR protective collar. So if I come back in here and look for that for BRR and then the protective collar, okay, you'll see the returns quite, it's okay for the month. And this is, again, this is all projected. Okay, so 8.86. So if I did BRR on an iron condor, what would my return be? Not so high at 4.52. So then again, if you throw in the futures arbitrage, it goes negative. So I've said this also before, and this is part of this process, which I think is important, which a lot of people don't talk about. You have three strategies here for the BRR. Which one would you focus on and put all the capital into that particular one that gives um, the highest projected return? So obviously, you'd want to put money into the protective collar because it gives you the highest rate of return. And these are the projected future path based upon historical uh, future contracts, along with kind of projected option chain data. That's another story there as well. The more detail that you can get in the option chain, the better these projections are. And to get that, it's very expensive. Um, the same thing with U.S. equity as well. Actually, U.S. equity is probably easier, but again, the problem there, it's not regulated. That's why um, when it comes to uh, option chain data, I don't know if that's really regulated as tightly as if it's under an instrument under the CME as well, the Chicago Merchant Exchange. All right, so here's the instrument analysis again. So this is very useful as well. So you can see here's the historical price line. With the moving averages, as we know, those are pretty reliable in terms of metrics from a technical analysis. So it'll give you the historical volatility over 20 days, 60 day, and then it projects the implied volatility for both on the call and the put. So that's really good to know. And then you can see the projected moves from this was generated yesterday. So over the next 30 days, and just kind of get an idea of what strategy will perform better. And you can see here, probably this one, the protective collar. I think this is BRR. That's aluminum. Let's focus on BRR. So here, you can see here the historical volatility, 2060 day, the implied volatility as well. And then you can see again the performance here as well. And you can see here the protective collar is projected to give you the best return. But remember, and this is really important to remember. So this is just a tool, okay? So it's all based upon what's in that summary report, and that spat out aluminum, Australian dollar, and BRR Bitcoin reference rate. So this tool is for educational purposes only. So this is definitely not going to be correct, but it's the best way we can measure based upon, again, historical future prices and somewhat what limitation you get with the option chain data. As I said, this becomes much, much, much more reliable once you get better option chain data. And I could kind of do it running and requesting option chain data um, for out to what I saw was about a year and a half. So if you can get that and then feed that back into an AI using all this fun stuff, then you're doing pretty good on your future uh, forecasting, because the option chain data is the crust of where things are going to go. As an example, for Bitcoin, I saw pricing for December 2026 on Bitcoin at 490,000. So that tells you if there are people actually making potential, call them bets, research, whatever we want to call them, if Bitcoin will reach that price a year and a half out at the end of next year. Okay, so these are very sophisticated ways to measure and forecast. That's why I have been hammering on, instead of projecting out within the stock options. Those are harder to do because um, the problem there is you can project where the stock market will be based upon historical patterns, but when you have an erratic President Taco, you really can't get consistent and clarity in the markets projecting out. That's why a lot of the markets are very careful projecting. Also, why a lot of stocks and companies are not offering guidance, because they don't know when you have these kind of erratic presidents. Okay, so there's no clarity in the markets because of that. But whereas if you're in the futures market and the options market, focusing on commodities, it's less impact, because if you're dealing with agriculture, everybody's still got to eat. I don't think the shocks are as strong. I can't say. I'm just speculating here. I just don't think that the impact is going to be as hard as in the forex currency market, or in the agricultural market, so on and so forth. The metals market, maybe because of gold and silver. There's that possibility. I'm just saying there's less impact generally. And because you have the options chain data that goes so far out, um, you just got better predicting methodologies. Okay, coming back to this, this is another powerful part of this particular version that I was able to generate. So here I can do back testing, and this is very powerful here. So if I got year to date, okay, over these periods, last month, all the way back to 6 months, I can start and speculate on the starting capital and the daily and the time frequency as well. One thing you'll note here is it does not do intraday. What I figure with my experience over the years, when it comes to intraday, if you look at when I contributed to Seek and Alpha, they did not allow any reports to use data that was lower than 4 hours. So even 4 hours might be a little problem, because the daily should be good enough. And the other thing is you can turn on and off your assets. So if I know the Australian dollar is going to give me negative, I can take that out. Here, we know that if I had the correct strategy, it's going to give me the highest return, which I don't know. Let's say it was actually I could do it up here. So uh, projected, if I remember here. Anyways, I'll just do some wild assumptions here. Otherwise, you'll be wasting your time here. So I'll take out the Australian dollar, leave these in here, and do the back test. Does not generate the plots which I'd like to see. I tried to iterate to get that working. I just gave up on it. Anyways, what matters is this right here, is the projected return on these. So $530, $500 total return. And then I can figure out the volatility. So as an example, if I just focus and put all my capital into aluminum, um, I guess I don't running that. I don't even know if that's valid. But you can, if it was such a problem, you could obviously run back tests separately in another module. I just put that in there. Sometimes it works, sometimes it doesn't. These are the joyous parts of AI. But again, this is just a research tool, not to be taken finally, but it helps you gauge on where you want to go when it comes to strategizing what kind of strategies you want, capital amount you're willing to put out, the time horizon on that quote unquote investment, that strategy, whatever you want to call it. And the other thing is here's the allocation and being able to run an optimization here. So what we're trying to do is get maximum Sharpe ratio, right? We want over the next month. Again, I'm going to take out all of these, the Australian dollar. So now this is projected, okay? So if I just ran as is, all the different strategies, here, this is the important part here, is the expected return. So if I only focus on the protective collar for BR, so protective collar, turn these off, right? Rerun the, you could see most likely, if I only put all the suggested amount for waiting on BR or Bitcoin, um, so if I put in 2,397, that 3,000, and only focus on this particular strategy, the protective collar, I could kind of get projected an 8% return on that investment. The other one here, it says about aluminum. The highest one I'm getting is this one right here. Again, another protective collar. So if I turn that off, um, protective collar. So I turn these two, we'll get different results. So when you have available capital and you're applying it to the wrong strategy, that's an opportunity cost. You'll learn that in the course that I've put out now, or will be putting out as a standalone. This is why I'm stressing people to take that course, because it's very intensive. But if you want to talk like a professional trader, if you want to talk like portfolio management, that's I've said in my this week's video on tips. The most lucrative to last uh, beyond the age of 50 in this business and make good money. You want to talk like these professionals. So this is the sort of thing you would want to do as a portfolio manager, to say, here's the projected. If we focus on these type of strategies, these are going to become opportunities costs. So we want to maximize those opportunities on the projected strategies for these. So out of this, we want the maximum highest expected return we get with aluminum, and same thing with the BRR, the Bitcoin. We want to use this particular strategy. And then you can see here that our expected return will be pretty good based upon what's projected. And if you have the proper institutional level options chain data, you can do very well here by going through this process. Okay. So this is the power of AI. I've gone where we're at with AI in terms of code generation, with the summaries that I'm able to pull out. Everything I'm doing 100% AI here. This is the new way to do it, with better projections. You're not involving hunches. You're actually using historical data. If you get the proper forecasted option chain data in the world of futures on options, meaning commodities, financial, like treasury, currencies, agricultural, and even market indices, you could do pretty good here by going through this process. I believe this is the new way to do it with AI and how to properly do it. As I said, I'm pretty convinced on it now, where I'm going to probably put some money on this. Unfortunately, it just took me an extra 2 days to get there because of what I described earlier. But this is the new way of doing things, unfortunately, or fortunately, I don't know. But what I do here is I put all this source code up, Joe. I put it up on my file share for my Quant Leap members so they can reverse engineer this and go through the code themselves. My next step here is to say, okay, I am now going to create a pricing, I call it a pricing engine. I will create a pricing engine for two assets, for two specific types of strategies. One is for the protective collar, okay, on BRR or Bitcoin, or in my case, Bitcoin and micro Bitcoin pretty well should give you the same forecast, the same results, because I mean, the micro Bitcoin is just a small representation of the full Bitcoin in the futures market and options market. And the same with the aluminum as well. I'm going to do that, create a pricing engine. And basically, this is the brand new part, going from all these many months, go from theory to practice, where I'm saying, okay, it's great to know all this theory. The AI can somewhat work, used to work more predictably. I think it still can work. You just need better data to provide it. And then be able to take all that practice and theory, and as I said, put it into practice and actually try to make money with it and see if these projections can actually work. So I'm willing to do that, but I'm only willing to do that in small batches. I'm not going to throw 50 grand at it. I'd be willing to bet maybe 2, 3 thousand at it and see what the outcome is. We'll leave it there. Thanks for watching and have yourselves a good day. Oh, and also, this just helps out. If you want to follow what I do, just go to quantlabsnet.com. Join my newsletter. I send out a lot of emails now every day, educational stuff, I hope. You can sign up here, and I've got as a free bonus. I did a book last year on C++ and HFT, and how a lot of these firms use the infrastructure, so you can get that. And that's a sign up as well. Okay, and then there's a learn tab as well. And as I said, I'm going to have it's not a new course, but it's a very involved course to get you into the thinking of what will get you into ultimately the portfolio manager type of positions that are the highest paying, close to upper management in these firms, and the longest lasting. So you'd be able to do this well into your 60s, 70s, well into retirement, because once you get into the mindset of being able to trade like this, you'll be able to survive and thrive in any environment from the trading perspective, the market's perspective, instead of being so niche down to one particular type of talent. Because I think once you're there, it's a problem. And also, you may not last in this field as well, because these type of professions can burn you out pretty quick. I got it all on my blog. That's why I put out the newsletter so people know about that stuff. Over and out. Thank you. Have a good day.